You know, our quest, our mission is to help you, the listener, learn the language of money and really just create a dialogue around how we make decisions related to our money, related to our finances. So there's a lot of emotions that can be mixed up, and often what we think is it's just a math equation, but it's not. There are other issues related to financial decisions. Today's episode is kind of around this topic. It's all about how our money can have an impact, but it goes beyond just giving your money to a charity or to an organization. And the way it can have impact is while you're investing, while you're growing your money, certain types of investments that you make have a more social or impact conscious type of directive. This would be the topic that we're going to cover today, called ESG investing. So first, what does ESG investing stand for? E is environmental, social, and governance. So that's kind of the bucket or the umbrella that a lot of these types of investments that have been identified, whether it's companies or organizations, kind of fall under. Now, that label ESG, it can sometimes be synonymous with things like sustainable investing or socially responsible investing, or some people even call it impact investing. So let's break it down. And I think a lot of investors prefer the acronym ESG because it literally just spells out, the three main criteria. And within those different categories, there's a lot of different components or things that it could be related to, right? What's interesting about this is a lot of times investors, and you see this trend moving more and more as they're investing their dollars, not only do they want to invest for a great return, but they want to invest in causes that they believe in. So they want their dollars working for them alongside the mission and the things that they also believe in and feel strongly about. So under that environmental bucket, you have things like maybe you're passionate about, the water scarcity issue, and you could fund, charities out there like the Water Project that are building water wells in, places in Africa and South America. Or you could invest in a company that also has a water scarcity mandate as a part of its corporate mission. That would fall under this environmental bucket within ESG investing. So investors are applying these non-financial factors as a part of their overall analysis process. And really what the attempt is to try to identify different risks and growth opportunities. So, historically, ESG metrics were not commonly part of mandatory financial reporting, meaning publicly traded companies were not reporting as a part of their S1 or K12s, how their company is doing as far as some of these ESG metrics. So companies now, right, fast forward to 2021, are increasingly making these disclosures or reporting this as a part of their quarterly shareholder meetings to allow investors, Wall Street, and all of their stakeholders, customers, know what they're doing as far as sustainability. Remember when ESG investing started to really hit mainstream popularity, when it was introduced to the investing world? Because decades ago, this wasn't even a topic. This wasn't something that investment firms took seriously. And a lot of companies were doing, certain corporate initiatives in order to fulfill some sort of ESG bucket, so that when they were measured by the MSCI, ESG index, they were able to check that box, right? So they had some diversity inclusion, they had, philanthropic efforts or even philanthropic divisions that were investing money. So banks are notorious for this, right? They're taking some of their billions of dollars of profits and investing into lower income or underserved areas. And now they can check a philanthropic box on their application for ESG investing, and they've hit it. So now whatever that translates to as a score, you could say, well, so-and-so bank is doing a phenomenal ESG job and they're really taking a stance on social awareness. When you tried to dig into that 15, 20, 25 years ago, what is the impact? Maybe marginal, maybe it was big. Now, fast forward as times have changed, right? It's not just a metric on an application for, ESG qualifications anymore. This is now a demand of consumers who are buying their products and services, right? The customers want to see this. John Mackey, the CEO of Whole Foods, kind of coined the term conscious capitalism. So, the capitalism of the 80s was all about profits at any cost. And, it doesn't matter if we're hurting, the environment, the world, or our neighbor, as long as we win. John Mackey and many leaders like him in corporate America said, hey, we need to make sure that we're doing the best job to serve our customers, but also make sure we're taking care of our employees, our vendors, our stakeholders, that entire sort of distribution line. You're just thinking about the demographics of leadership, how that's changed, the cultural impact that they had throughout their lives. When I started in the business and people were talking about ESG investing, socially aware investing, there was this discrepancy between a value motivated investor, so one who is looking for financial profit, and a values motivated investor, one who is looking for social impact. And you would tell somebody, hey, if you want to invest in, and be green and be socially aware and make a difference and have an impact, hey, your portfolio may suffer, right? Like you may not get the return that you would get if you invested in other things that you may not agree with. Today, that's not the case. So you're looking at these factors drive financial performance in the marketplace significantly. Listen, news and media, and we talk about this often, does not help the ESG cause, because you don't have to go back 20 years ago, but even as recent as 5 or 10 years ago, a lot of times the issues you would see in the ESG categories were highlighted by news and media. And it was happening when investors were suffering, substantial losses in their portfolio, when things didn't work out, on whatever listed companies and listed equities that were being invested in. They're attributing to poor management and, the risk of the variety of ESG issues that exist. I think ESG has actually performed phenomenally, and especially in recent years. And this is not to say that it'll continue in this trend, but again, I think it's going to become even harder to classify certain companies as ESG or non-ESG, where potentially, years ago, ESG was the minority. So there was the select few who were able to be in that bucket. Today and into the future, you're going to see non-ESG companies kind of become the minority, because so many corporations are moving into being more socially, environmentally, or governance aware. And it's likely that they're gonna fill one of those buckets, if not all three, right? Look at even the evolution of that. Styrofoam cups isn't even a conversation. Now it's, are you using pasta straws? Are you using eco-friendly, disposable containers that can be recycled and made into shoes or hats later after you've eaten a cheeseburger out of it? The cardboard straws are tough, but I don't know who makes them, but those pasta straws are genius. That's brilliant. Whoever did that, kudos to you. But my point is, investor perception of ESG companies and the direction that all companies, no matter what industry you're in, right? Hospitality, retail, food service, banking, insurance, healthcare, ESG-minded companies are future-proofing their own business models. They're going to be better suited to attract top talent, right? So you look at like millennials, now the largest demographic of the workforce. You look at the next generation, Gen Z. If you want to get talented people onto your team, a lot of people in those demographics who are entering the workforce are willing to sacrifice money, salary, to work for organizations that they believe in the mission of what they're doing. And that's how you're going to bring in the best people to create the best and most innovative products and or services. And that alone will help, future-proof and sustain your business for years and years to come. It's not just ethical anymore, right? It's practical. So each year, BlackRock writes what they call their letters to CEO. So this year, BlackRock's 2021 letters to CEO, here's a little excerpt from it. It said, companies with better ESG profiles are performing better than their peers. The infamous investment firm calls the extra cash, the old pocket investing in ESG, the sustainability premium. You get the influence of a firm like BlackRock communicating that specifically to corporate leadership, right? To the CEOs of America. You better believe that right now, all of those leadership teams are figuring out, hey, how can we not only do better, but we want a part of that sustainability premium. We want to outperform financially because, let's be honest, all of these companies are out to make profit, right? And their metrics of competition, whether it's relative to their peers in their industry or with any company overall, is how well are you doing financially? They want to participate in that sustainability premium. So listen, if you're listening right now and you say, hey, I want to participate in this. I want to find out, Am I investing sustainably? Am I having an impact through my investing? So ESG companies will score highly in those environmental, social, and governance factors. And here are 6 methodologies for bringing ESG considerations into your decision making right now. Here's 6 ways you can do it. First, you can do just a screening, right? So you can do exclusionary screen on the MSCI sustainability or ESG index tool. You can go to that website, Google that, and just put in a screen to filter out companies that don't even meet the metric. Next, look for best in class selection. There are, rating systems, AAA, AA. Look for the best in class in the areas that matter to you most. Look for themes, thematic investing, right? So if you have more passion, if you care more about one topic than another, that's a way for you to participate in this. Active ownership, meaning just own the stocks, own the companies. Impact investing, and then finally ESG integration, which is going to integrate all 3 of these different areas. When you add this to your own research, it creates more work, right? So this is not a replacement for what we'll call traditional research. You got to understand the financial metrics of a company. You got to understand their marketplace, their opportunities for growth, how their leadership is, what markets they're moving into. So these are all the fundamental research you have to do. As in all investing style, ESG investing is not perfect. There are pros and cons. So some of the cons, or some of the things to be aware of. First, this category and style of investing has a very short track record of performance. So depending on who you ask, ESG investing has been recognized as a market strategy. It's only been around for really a few years. As we alluded, could go back 15, 20 years. In those early days, it was, very, very unclear about what dictated being qualified in that category. They're very fuzzy metrics. So because there's no really universally agreed upon standards for ESG, there are funds out there that could be a little bit more unsavory that start using those terms to mislead investors and try to, attract dollars in capital. And finally, this is classic, the government just doesn't understand ESG. So, the Department of Labor issued a confusing statement that sounded like they were banning ESG investments from retirement plans, which wasn't actually true. There was a lot of backlash about it. They needed to, quote unquote, revisit the rules. So the point being that even the federal government who regulates the financial markets is very unclear about this. You have to look at how this applies to your portfolio and, more importantly, your overall financial plan. But we wanted to make sure that you're aware ESG investing is here. And I think in our opinion, at least in my opinion, it's not going anywhere. Well, if you found this episode helpful, as always, please like, subscribe, share it with a friend. I'm Andrew Martz. Talk to you next time.